Welcome back to Trading 360. I'm Marley Caden. It's time for the big three. We've got 3 stocks, 3 charts, and 3 trades. Rick Ducat is here to take us through the technicals, walk us through those charts. And here to take us through the trades is Don Kaufman, the co-founder of TheoTrade. Great to see you both. Don, great to have you with us as always. Can we start with a big picture thought on the market and the performance we've seen so far this week?
Yeah, right now what we're seeing throughout the course of this week is it's literally just continued sector rotation, sector rotation. If you look at like the S&P 500 advanced decline line, we're for the most part very much 50-50, which is kind of a scary premise because, yesterday at one point, the advanced decline line was positive. The S&Ps are down just over 0.5%, so being dragged down a little bit by tech. Markets are going to get extreme when we start to see higher degrees of correlation in the S&P 500. That is, if you will, many more stocks trading on one side of the market or the other instead of this constant rotation and, tuck money into the financials, into the energy sector, away from tech and vice versa.
All right, so then let's talk about your first trade here. You've got Broadcom. Shares under just a little bit of pressure today, down about 0.25%. But they did report record revenue for Q3 back when they reported in early September. Are you bullish or bearish here, Don?
I'm bearish, and I'm going to get rather contentious right off the bat here this morning, predominantly because I think some of the AI spend in general, I mean, really in the last 48 hours, I think we finally jumped the shark. We're talking about trillions of dollars. We're talking about a company like, for example, Alibaba today, which overspends, underdelivers, and the stock soars on this. Where is the upside potential on this particular spend? Where's the profitability on this spend? We're talking about $100 billion investment into OpenAI, which is a non-for-profit company at this point. But when I look at something like Broadcom, I think this one's actually ripe right now. What Rick is going to show you technically makes a difference. But I think this has to do with, again, we've hit that max potential for spend in the near term, or at least the announcements. And from here on out, where can you go? What upside is there after you start mentioning $5 trillion of spend on server farms? With that, Broadcom, I'm looking at a bearish position here. I'm going to give myself the gift of duration. I'm going to go out to the November 21st expiration. I'm going to buy the 310 puts. I'm going to sell the 300 puts. Big $10 wide put spread done quite a ways out of the money. This one's done for a $2.63 debit. The other aspect in here is the options market itself is showing an inverted implied volatility, which is an extreme condition in really any tech stock.
All right, Rick, so let's take a look at the charts on this one for Broadcom. In a bullish potential trade here, what are the technicals telling us?
So this is one of those charts where earnings had a very clear impact. Most recently, you saw it in this very pronounced gap to the upside here. I'm disappointed. I was off by 1 with Don. I had 311 marked down. I was trying to go as best I could along the highs and closes here. But really, 310, 311, that's a very similar level here. But that also gives us this gap to watch out for. The space between about 310 to about 331 or so is our big earnings gap here. So beware of fast-moving prices if we do start to break down below the previous low that we established after the gap up. That's that 330, 331 level, because it could signify a retreat back down to that 310 position here. So now if we were to look at our moving averages here, we can see that we are starting to wane a little bit here. We are crossing below our very short-term 9-day EMA. We're testing our yellow 21-day EMA. That comes in near about 334.50 at this time. RSI also showing a bit of interruption here. We have broken back below this trend line after a rapid-fire crossover that was reversed. We broke to the upside. We entered the overbought area. Now we have dropped back down again. We still remain above that 50 midline, though. That would be a further bearish signal if we were to cross over. In terms of volume profile, we can see that we are giving up the small node that formed here near about 345. Our +1 channel aligns quite closely with this level that I had highlighted near 356. That was an old high point and then a lower boundary here until we had our breakdown once again. So that could be an upside area to watch. And then, the 300 level, that's where the volume node is below. So that would be the 310 to 300 strikes that Don was noting with his trade.
All right, now let's move on to our next one here. Eli Lilly. Don, I don't know if you know, but I am fascinated by this GLP-1 race and all of the pharmaceutical companies in it. Eli Lilly just announcing they're building a $6.5 billion plant to help make their new obesity weight loss pill inside of it. You know, as far as performance, though, year to date, down almost 20%. In the last year to date, mostly flat, down 3%. You know, what are your thoughts here?
So some mixed feelings. You know, the trade that I'm going to do right now happens to be bearish, but not because necessarily the outlook. It just has to do with some of the technicals, which you're going to look at here in just a moment. You know, one of the things I think people have to recognize about GLP-1 and some of the drugs in the pipeline right now is they're not all that complex. And when you start to actually look at the marketplace for these, they're being ripped off left and right. I mean, everybody and every pharmaceutical, company out there has the capacity to make something like GLP-1. And they're doing exactly that. And it's incredibly difficult to actually protect patents these days. So I would actually look at Eli Lilly and tell you that's exactly why, GLP-1 and all this success initially is leading to sell side activity over here is everybody is getting a piece of exactly this. My trade, though, happens to be a little bit more about the kind of technicals in here. The chart right now is turned into an utter kind of chop fest, but I'm looking forward to kind of chop back into that 700 realm. It looks like it's rolled over recently. A little bit of sell side activity here, as you're going to see in a moment with Rick. So I'm not going anything wild, just the OX17 expiration. I'm going to buy a 242 half day put and sell a 740 put. So 742.50, selling the 740 puts. It's a $2.50 wide put spread. Again, 742.50, selling the 740 puts. This one's done for 90 cents. It's just a very slightly out of the money put spread, looking for this kind of drop back down, possibly to 700. Although I only need a few dollar movement in Lilly.
All right, so right now Lilly trading about 744.34, and we've got the chop fest that you mentioned up here. So Rick, walk us through it.
Yeah, so for the most part, I do see the choppiness point here, but mainly lower highs, as well. So choppy, but a little bit more toward the downside here. Now, that is a little more complicated because we have recovered off of these recent earnings lows near 623, so quite volatile recently here. For now, though, our green line, 725, this was a series of low points recently. This was around where price stabilized, but the reason I highlighted it is going all the way back here. That was our low point and our worst close. So even though it's been breached a few times and passed through, we seem to still be gravitating toward this level as a supportive area when we do cross back above it here. So that's why I chose to highlight that line specifically here. 742, 740, it's hard to see given the scale of this chart. Basically, you'd be looking to hold on above the lows we've established today so far, go below those lows we are near we've established today so far. So looking for more declines here, but given the scale, it's a little difficult to see here specifically. So we can see that we have clustered moving averages here near 750. Clustered moving averages suggest either very choppy price action or very sideways price action. In this case, we kind of had both. We had sideways period, then big swings to the upside and the downside here. And now we're kind of back toward this confluence point here near that 750 level. So a noteworthy point to either hold or break above here in this case. If we were to also look at our standard deviation channels and volume profile study, we can see the point of control, the heavy trading area, is right about where we are now. Once we start getting below 740, things start to really thin out. And that's also, we can see our blue line, our linear regression line, 733, line of best fit. That's our idea of fair value. So by this measure, relative to its own history, pretty close to where you might expect shares to be, perhaps even a little above where you might expect it.
All right, yeah, right now trading just below that 745 mark for Eli Lilly. So Don, let's get to your last final trade here. Goldman Sachs, bullish or bearish?
I'm bearish. I'm 3 bears today. 3 bears across the board. I am just, by the way, when it comes to Goldman Sachs, I'm seething bearish on this one. So Goldman Sachs is up right now, 40% on a year-to-date basis, 10% in the last 12 trading sessions. Predicated on exactly what? Lowering interest rate, Okay, a slowing economic kind of backdrop over here. So quite frankly, the only technicals I'm looking at is completely vertical chart. I mean, this thing is absolutely parabolic in the last couple of trading sessions. Probably well overdue for some type of a pullback here. Rick will look at like RSI in just a moment. Nevertheless, okay, I'm building a bearish trade, but not in the here and now. I'm going to go all the way out to the November 21st. Let some of the fundamentals, if you will, kind of grip hold of this marketplace. But for the life of me, I looked into some of the reports of Goldman Sachs, and you just really can't get to that 40% year to date. Is their business really 40% better off, than it had been, if you will, a year ago, or even over the last couple of years? Nevertheless, Nov 21st expiration. I'm going to buy the 765 puts, buy the 765 puts, sell the 755 puts, $10 wide put spread done for a $2.70 debit. Again, I'm all the way out over 50 days to expiration, taking a big swing at Goldman Sachs for the downside.
All right, Rick, so take us through the charts here, and also, what's the RSI indicating here for Goldman Sachs?
First of all, thank you for the children's book idea, Goldman Sachs and the Three Bears. That would be, wonderful children's literature there. But anyway, so 750, that's the old highs that we saw here. That's about where this trade would be looking to see the price action go, breaking through this trend line and shifting downward here. So today we have some candle activity that does not look too promising. You can see yesterday we had this spike up to 825.25, making these intraday yearly highs here. But price actually closed a little lower than it opened here. Now this is not exactly a bearish engulfing candle. The previous day would be green, but similar type of activity where we have fallen off sharply from the open, and our real body, our range of the open to the close so far, the last rather, is swallowing up the previous day here. So that's not very promising bullish activity here. However, we still are holding on to that trend line here. If we do start to move lower, we could see that our 9-day EMA in blue here near 795 would be the first area to look for a potential foothold here. Then 776 or so would be our 21-day EMA. RSI, we can see broke through our downward sloping trend line here, but now it's starting to level off. It remains overbought, which is a sign of strength here, but the bearish signal would come with that crossover back below 70. So if we were to think about our other studies here, volume profile, well, once again, our volume node in this case, the major one is all the way down here, not really too terribly close, coinciding with this range we saw before near 720, 700 or so, that general area here. But right now, we're at our +1 standard deviation channel. Potential resistance at 807. Seems like we're stalling out right around this point here.
All right, Rick, right now Goldman trading at 803.66, shares down about 1/3% so far today. But I want to say thank you to Rick Ducat for walking us through all of those charts, and Don Kaufman for his 3 bear trades today. Thank you both for being here.